On oil marketing companies have been in the center of all the action over the last few months, while the past few days have been about the government asking them to absorb a portion of the cost. There were no such diktats in the second quarter, which means that the fuel retailers should have been able to protect their margins. Right, Samit?
Yes, Neeraj, if you see in the second quarter of financial year 2019, the fuel prices were rising in tandem with the Brent crude prices. Now, Brent crude was up nearly 10% in the second quarter of financial year 2018, while the retail petrol and diesel prices were higher by close to 11% in this quarter. Now, this rise helped the oil marketing companies to maintain their gross marketing margins. Now, if you see in the second quarter, the oil marketing companies earned a marginally higher and a stable gross marketing margin of around 2.2 rupees and 1.6 rupees on sale of every liter of petrol and diesel. However, the number was lower compared to the earlier highs of 3 rupees per litre, and that was because of the higher crude prices and a weaker rupee. Now, this higher crude prices, generally if crude averages higher compared to last quarter, oil marketing companies tend to report an inventory gain. So in the second quarter, if you see, crude averaged around $75.89 per barrel as against $74.97 per barrel in the last quarter. That is the June ended quarter. So this could result into some inventory gains for the oil marketing companies. However, the amount of this is expected to be lower compared to the June ended quarter, where the three oil marketing companies reported an inventory gain of close to 12,500 crore rupees, because the crude averaged 12% higher at this quarter, and in this quarter it was higher by around only 1%. So the inventory gains for these companies are expected to be a bit lower compared to last quarter. Now, on the refining business, if you see, the gross refining margin was largely stable in the second quarter. The Singapore gross refining margin, that is the Asian benchmark, averaged around $6.1 per barrel as against $6 per barrel in the last quarter. Now, this was because of the rising crude prices, which kept the prices of the petroleum products also under check, and that's the reason the gross refining margin was largely stable. Now, gross refining margin defines a refiner's earnings on processing every barrel of crude, and a stable gross refining margin means that no surprises will be seen from the refining segment of the oil marketing companies. Lastly, one dampener for the oil marketing companies, that could be the weaker rupee. Now, for an oil marketing company, crude is the major raw material which is purchased using the US dollars, which means that a weaker rupee that means that they need to shell out more for purchasing every barrel of crude. Now, in the past, we have seen oil marketing companies report a foreign exchange loss or a profit in tandem with the rupee movement. However, the amount of the impact depends on how much of this they can pass on to the consumers. Now, if you see in the first quarter, they couldn't pass on this impact of weaker rupee to consumers by taking price hike, and that is the reason they reported a foreign exchange loss of close to 3,000 crore rupees. However, in Q2, they were able to take price hike and pass on this impact to consumers, which means that there would be a foreign exchange loss in the second quarter, but the quantum of the same would be lower compared to the June ended quarter for the oil marketing companies.
Okay, Samit, thanks for putting that into perspective. Just one quick question, Samit. Do you think people will really look at these numbers when they get reported, even if they are marginally positive? Because we all know what the current situation is, and we know that even if the Q2 numbers may have looked reasonably okay, we will see a drop in quarter three. And I remember you saying this, that with the election calendar looking very strong, a lot of people would believe that if not a cut, there'll at least be a freeze in prices.
Yes, that's sure. People will be looking for the second half of the financial year 2019, and that the outlook for that looks very bleak, because as of now, if you see, the gross marketing margin that they're earning is lower than what they earned in the second quarter, which could further fall going forward because of the election season that we have. But we'll have to see how that pans out. And given the fall that we have seen in the past few days for the oil marketing companies, that could have been priced in, but we'll have to see how that works out for the oil marketing companies.
Okay, we'll wait and watch, and of course when the numbers come out, we'll talk about all of that as well. The reason of bringing this up right now is because OMCs are in the center of action. Samit, thanks for putting that into perspective.